Good evening. Ira Epstein with your metal market update, and this update is for Monday, and we're at the 11th of April, 2022, and the time 6:35 p.m. Central Time. Now remember, it's an abbreviated week. We have Good Friday, we have Passover coming, we got a lot of events, but we won't be open on Friday as normal markets. So what do? Well, you just shorten your time scope as to what's going on. Events in the morning, we're going to get the CPI numbers. This is a big number. The market's going to be focused on it, how much inflation we have. You'll hear analysts after it comes out. It's peaking, it's not peaking. You're going to get that type of talk. If I recall, and I'm doing this from memory, they're looking for it up month over month, 1.1%, and for the core CPI to be up about a half a percentage point in line with what it was in February. So now let's talk about other parts of the market. COVID spreading again. Philadelphia, the first big major city to say the masks go back on. And there'll be some of you that write me, as there always are, and you'll say, COVID, back, vaccines don't work. And the reason that you write me is you have no idea what you're talking about. Simply put, the vaccine does not stop COVID. It mitigates how sick you're going to get and whether you're going to die or not in many cases. That's what it's about. If you get a flu vaccine, does it mean you're not getting the flu? Get serious. It's a question of, do you get a bad case of it? That's what the vaccines are about. I wish they had a vaccine where you don't get a common cold, where you don't get COVID, where you don't get the flu. It doesn't exist, so it's all a degree. So for those of you that keep writing about that, and there's always one or two of you, you're just misinformed. So as we take a look now at what to do with these markets, let's go to the chart action. First, the weekly chart of closes is still friendly. You're up a half a percentage point now for the week, got a little bit of gain. The key is that you're staying over the 18-week average, and when you're over it, here's how I view it. When you're over that number, you have a bullish bias. When you're under it, a bearish bias. Think of it that way. Next, I go to what the charts are doing. It's pretty hard to argue that you haven't just, after this big rally, gone sideways. Probing again, the highs up here, got thrown back late in the day from that, as you could see. The pattern is not one of a trend. You have a lower low and a higher high. Where I went to school, that's not a trend. By the way, the swing line is this brown line on the chart. Without it, it's hard to see where your break lows and your rally highs are. I devised this technique many years ago, and I'm going back a couple of decades, so that I could teach at that point my son, who is now, I'm thinking about it, I think he's 24 years older than when I created this. I promised him that I could teach him how to look at a chart and tell me if it's in an uptrend or a downtrend at 13, and what is the risk associated with the trend. And he could do it. He could do it blindfolded almost now. And the reason is it's a simple technique. I teach it in my charting course, and it's one of the backbones of what I do. But whether the trend is up or down, you filter it with moving averages to find out, is the market valid with the uptrend or downtrend, or is it a contra-trend move one way or the other? In this case, it's not trending. The bias is up, supports the 18-day moving average of closes. I want to come back right here. Where's the Bollinger Band? You heard me before say, if you don't learn how to work with Bollinger Bands, this is like trading with this arm completely behind your back. You're just going to keep getting bullish up here, and you're going to get very bearish down there. I can teach you how to change that from your charting technique, and I think do an efficient job of it. What you do with it from there, well, that's up to you with your own techniques. I'll talk about that at the end of this. I'll run some information on that for you. Suffice to say, I think the pros came out today of any positions they might have had on a long side from I don't know what technique, and they accepted the fact that that's an important resistance number. Now, the longer this market spins around in these narrow Bollinger Bands, the bigger the eventual move up or down. If it's down and it breaks under it, one of the potential numbers, 1863.10, the 100, day moving average, that ties in, if you remember the weekly chart, with that number. I'm not saying it's going there, I'm just saying it ties in. Momentum, pointing up, is the number overbought. Any reading over 70 on a daily chart on a slow stochastic, it's always the red line that'll move first, is overbought. Overbought to me says, okay, conditions aren't right for buying. Number two, you hit the upper Bollinger Band. There's got to be other things to look at. When I look at the gold-silver ratio, I told you as the market was up here that if the market corrects, the first thing that'll happen is a challenge of the 18-day moving average of closes. It's exactly what the market has done. It's from here that the market has to decide what to do next. Was this a correction? We go back up? Or does it start getting under this, which means then that this number keeps falling, and that means you need less ounces of silver in a perfect world to get an ounce of gold. Think of it this way. You have a friend, you have a store, whatever you go to. You bring in right now 77.3 ounces of gold. Of silver. And you say, I want an ounce of gold. No commissions involved, no markups of any type, and that would be just what it is. And you're just taking one price, dividing it by the other. In the silver market, you can see how the market's come alive. What it did is coming in, you had lower highs, lower lows. If you take out this number, what happens? You break the trend. But there's a bigger story here. This market hit the Bollinger Band 3 days ago. Again, you're not embedded. You're oversold hitting that number. Just the opposite of what you did in gold to the upside. This is where the professional money, the way that I interpret it, came out of the market. The resistance point is the 18-day average of closes. It got over it today, and by the end of the day, it just couldn't do too much with it, okay? So now tonight, you're getting another bounce in it. Okay. Do I think it's going to get up and over this number? Not easily. Are we trending? No. You have a lower low, higher high. But it's rejecting wanting to stay down here, and it's also saying at the same time, there's a lot of support in this market here. Why? Well, as you know, China's in a massive lockdown. Shanghai, record amount of cases yesterday. So the city stays 26 million people in a lockdown. But there's other main cities throughout China that are in lockdown. And what that means is you can't get people to the factories. If they can't get to the factories, they don't need silver, they don't need gold, they don't need iron ore. I can go on and on. That doesn't mean that they won't need these products down the road as this wave of COVID goes away and China then releases people from the shut-in and throws money at the marketplace. Why? It'll throw money to get the economy going again. As sure as I'm talking to you, that's an event that's going to happen. In the copper market, this is part of that. Right on down. So you go up to the upper band. What do you learn when I teach you this? You're coming out. I don't care what your technique is. I'm teaching you to come out. You're not embedded. You come down. You're not embedded. What am I teaching you to do? Lift yourself if you're short out of the marketplace. In the platinum market, lower highs, lower lows, and this current rally's now, the key is this last high right here. I don't think it took it out. That number is $1,004.20. And the rally we just got, let me show you, right up into this resistance zone, 997. I think you'd agree with me. That doesn't take it out. Where you're getting a little more interest is the palladium market. Why is this one come alive? Let me explain this. Pretty fascinating. The London Metal Exchange has barred the two main producers that it gets the palladium from, 25% of what comes into that exchange for deliveries. They're barred, the Russian companies. So all of a sudden, what you've got is no way on those contracts that you set there, you've removed 25% of the supply. You think that isn't bullish? That's what's lifting this market. So you've got higher lows, higher highs. The market came alive, not today, it came alive on Friday. It extended. I see resistance at the upper band and support right here. So I'm looking for on breaks, traders to continue to buy. They have that information just the way I'm sharing it with you. That information came out today, so gives you an idea about that. Then we get to the dollar. The dollar is traveling between the lower band, the upper band, trying ever so slowly to widen out the bands. Will it embed? Okay, that's the big thing. Both numbers tonight are over 80. The market's not open yet for Tuesday's session. On Friday, the numbers were not. You need 2 more days of that. If you embed, then I start lifting to even higher projections on the dollar, telling you off the embedded reading what to do. Right here, no, I'm not part of that camp at all. As I said, you have to teach yourself how to work with these black algorithm lines called a Bollinger Band. Here's how you do it. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.